How are all my friends doing today on this beautiful Monday morning today? A lot of action's been happening in the markets lately. The pros have been making a lot of money, and the I guess you couldn't say newbies, but the certain people have been losing their shirts over the past month or so. I told everybody a month ago, this is more to myself than anything, I said, okay, wait till the election's over and then start looking at things, because the election's just going to be a bunch of, it's just going to be more excuse for the markets to take what money they want from people. You know, they manipulate price in a ridiculous position and say, oh, it's because so-and-so got elected. Vice versa, it doesn't matter which way or the other. And some people, they love trading news. Personally, I do not. I just like to trade price and trade against other traders, if that makes sense. That's what has found me the most success. So you have to do what's good for you in this business. But with that being said, now that things are settled down and all the hoopla is over, it's only been a week or so since the election's been over, so all the hurrah hoopla is done with, we can kind of get back into the swing of things on our trading journey. And it's nice to step aside for a minute and kind of refresh and reevaluate everything. Today, I have been looking at pound versus dollar, okay? And I've been looking at it on a monthly time frame. So this is like a really zoomed out perspective that we have, okay? Very zoomed out. And it's making this little, you could call it whatever you want, you know, a triangular pattern, a rising wedge, whatever you want to call it, an upwards trend line. There's so many ways to look at this thing. But what I see here, just looking at it on a zoomed out time frame, is we're sitting in the middle, okay? So to me personally, this is just right now is a do nothing. We have a high here, we have a low down here. Right now we're in the middle. So to me, it's just, okay, there's no point in touching anything, personally, for me, because I want to sell high and buy low. So if I just come to the chart, zoomed out, look at it, we're in the middle, I have to sit on my hands. I've missed whatever move there was to be had, okay? So a potential for me, if I'm looking to buy, okay, I'm looking to buy down here. It doesn't matter if it's down here, or if it makes another low. That's where a lot of times as a trader, for me personally, in the past, that's where I have had so many losses. Because I think I project price is going to come down to say here and here. But it's not going to break that low. And then it's going to bounce and go from there. But that wouldn't happen. What would happen more often than not, most of the time what happens, okay, is I think price is going to come here. It'll stop out some people that have been buying, take their money, and then it'll come back up and take out all the shorters' money. And more often than not, I mean 80% of the time when I'm thinking about that, it does that. It does just that. But how does that relate to my success rate? Well, in the past, the reason my success rate was so low and why I kept losing over and over and over and over again is because I'm entering here and then I get stopped out. I enter here and I get stopped out. And then finally I enter here and I have my stop way down here and I get stopped out down here. And then eventually it does just what we wanted. It goes up and takes that short money. So this kind of goes hand in hand in why I tend to trade the Forex market more than any other market. Okay, I would say 80% of my trades are on the Forex market and 20% of my trades are on the stock market. So why am I so heavily a Forex trader? Because over my 4 years of trading for myself personally, I have found that the Forex market is more akin to me being able to stay in the trade. Okay? And what I mean by that is the Forex market, it gives me this beautiful advantage versus some other markets. And the advantage it gives me is the ability to trade in micro lots on the Forex market. Okay? A micro lot, I'll tell you what a micro lot is. A lot in the Forex market is $1,000. So one position in the Forex market is $1,000. So a micro lot, it's only $10. Okay? So with micro lots, I can be able to stay in a position because I'm not going all in right here, example, and then losing everything right there because I get stopped out. That doesn't happen to me. The reason I trade Forex market is because it's more akin to my style. I can enter a position here with a micro lot and then I can hold on to it. It doesn't matter if price goes against me. I'm expecting price to go against me. Great. If it takes another leg down, what do? I enter another position. I'm trading so light, I don't have a stop. It's irrelevant to me. Because I'm trading so light, I can just let it continue to go against me. Oh, it went another leg down? Great. More opportunity for me to get in. I enter another position. Sure, this first position I entered up here is upside down. Okay. But it's giving me a better average. And each individual position is by itself. And then what does it do? Oh, it breaks that low. Even better. Maybe I'll enter 2 positions when it breaks that low. So now I have 5 positions on the table. And then I just sit on it and I just wait. And more often than not, what does it do? It comes at the very least, it'll come back up to where you first entered that position. So my first position will be break even at this point, and the other 4 positions I entered are all in profit. I can close the trade right there and I'll be way up in the money. But it's because I traded so light. You know, that is like the biggest thing to investing and trading, is trading light relative to your account size. So you never are concerned about, you're not having to watch your phone. Why did I get into this industry? I've said this 100 times before, and I have to keep repeating it to myself until I get to the level I want to be. I got into the industry, which I'm sure many other people have, not for the money. Yes, it's for the money, but the money is only the product of what my true goal is. And my true goal is freedom. So how am I having freedom if I'm so focused on the chart 24/7 that it negates all of my other free time? That's not what I'm in it for. I'm in it to identify good setups and have my orders placed and let the market do its thing. And laugh at how often I'm getting paid by being patient and just sitting back and letting my orders get filled. And letting everybody trade the 1 minute time frame. Okay? All the 1 minute's going to do is it's just going to wreck you over and over and over again. Perfect example. GBP USD. Looking at the weekly, okay? We're zoomed in a little bit more, okay? This is like the past year of price action, okay? This is literally the past year, okay? So the past year, pound dollar, the price has been moving up, okay? If you were of somebody that was of the belief that, okay, well, I think price is going to, pull down for a nice pullback, okay? So every time you see in a pump, you're trying to short it on small time frames. Short, you get stopped out. Over here, short, you get stopped out. Short, you get stopped out. How much money has been taken off from everybody trying to get the absolute top on pound dollar in the past year? A ridiculous amount. If you traded light enough, you could be doing okay now. Because you could have just traded light here. Okay, well, it went against you. Enter another position here. Well, okay. It kind of pulled back a little bit. Oh, it went up again. You could have entered another position here. Another here. Another here. Every time a high is broken, you could just be adding to your short. If you're of the belief that on this monthly, it's going to pull down here. So time will tell if you were right on entering your shorts. If it comes down here, great, you can close them out. You made good money. But that's not particularly my style, I'm just looking for a nice, big, heavy movement, Right now, pound dollar, I'm looking for at least 120 to be my first position to open up on a long. And what does that mean? Does that mean I go, oh, when it gets down to 120, 121, am I going all in? No. That means I'm just entering one position. And maybe another at 110, 115, 110, 105. If it breaks this 103 low, great. I might even double up on a few positions. I'm always looking for pain and punishment as I'm entering. Because as a contrarian trader, this is something I have to really put down in my, my go-to personal rule book. As a contrarian trader, I have to give myself the ability to stay in a position. And I have to trade so small, it doesn't matter how far against it goes against me. Eventually, I will see my idea come through. And that's what's happened with the majority of my setups. I have had some excellent calls in my 4-year career, but haven't capitalized on very few of them because the ability to stay in the trade was always negated, always was getting stopped out or closed out. Okay? It always was going to go more against you than you think it does. So even here, say on this monthly trade, say we do break this 103, and I've already entered 5 positions at that time. It could go down to 80 cents. You never know. I mean, of course that would seem ridiculous, but even if it went down there, say we had some black swan event for the value of the pound, something happened to the British government and their dollar just got so weaker compared to the US dollar, and it just went under parity and 95 cents, 93 cents. That would be nothing but a better entry for us. Okay? You don't think it can go that low? It can do whatever it wants. It can do whatever it wants. Look here at the yearly. The yearly, we are so low on the yearly. There's no reason. Price can do whatever it wants. You think that this 103 is the absolute low? It can easily go below that. So as long as you keep that in mind and keep your position so light, you'll never have to worry about what price does. It doesn't matter. So this isn't like me recommending, oh, well, just don't trade with stops. Well, that you have to have some kind of capitulation point. Okay. But when you're zoomed in on low time frames, you're going to continually be A, stopped out, or B, have to quit it because it goes too far against you on the low time frame. Okay. But when you're trading higher time frames, you really can just sit back and just say, okay, well, that's just more opportunity. I'm sure that right here on pound dollar, over the past year, we've been going up. And there's been just people just buy. They've got long orders like crazy, hoping for it to go to $2. There's no reason why the market can't just rip it down and take their money and they'll all panic in a loss. Okay? There's no reason why the market can't do that. They'll take it if enough's there, they'll take it. So that's all I'm doing right now. I'm just setting my alert on pound dollar. If it breaks 121, okay. I get an alert on my phone, I start entering. Then I'll set another alert for 115. If it breaks that level, great. My phone will notify me, hey, pound dollar just dropped below $1.15. Wonderful. I'll enter another position. It's all about just sitting back and letting price come to you. So that's kind of my little spiel today on how I kind of look at things and how I'm looking to capitalize on pound dollar in the future. Pound dollar, to me, it's going to be one of the better trades this upcoming year of 2025. Personally, I'm looking for it to be one of the best trades that I have in this upcoming year. We had a great gold trade this past year, 2024. We had a couple good pound dollar trades. We had an excellent dollar yen trade. Okay, but dollar yen, we also had a couple losses on there. So dollar yen was kind of like an eye-opening moment for us on how we have to reassess our position taking and how I need to hone in on what has been working for me. So that's kind of like something that is key for my personal journey too, is I'm at the point now where, okay, I've had so much experience at this point that I have to start analyzing what has worked and what has not worked, and start going forward with what has worked and just dismiss everything that has not worked. Just dismiss it. Pull it out of your mind, throw it in the garbage, forget about it. Focus in on the few things that have been working and go with there. And the number one thing that has been working for me is that trading the Forex with my positions. It gives me the ability to ladder in to setups. I don't have to be perfect. That's what I love about trading Forex now. I love trading Forex now because with the Forex market, I don't have to be perfect. It gives me this beautiful ability to have all these separate positions, individual lots that are completely separate trades by themselves. I really enjoy that because it gives each little position its own little formula. That's opposed to trading the stock market or the crypto market or the commodity market. Any other market, it doesn't give you that ability of having separate positions. For example, on other markets, if you buy something at $1.30, you buy something at $1.30 and then it goes down to $1, okay, that doesn't treat it as two separate positions. When you add to that position that you bought at $1.30 and you add the same amount of money at $1, all it is going to do is just bring your exact average down to $1.15. There's nothing wrong with that. It is inherently the same as having separate positions, but it brings your average down. So down here, your dollar that you bought at, it wasn't really $1 that you bought it at, because you had another position open up here at $1.30. It pulled your average down to here. The reason I enjoy having the micro lots in the Forex market is because even though I had bought $1.30 up here and it goes all the way against me, well, yeah, it's that one position's going to be way negative. But this position I bought down here at $1, it's a gorgeous buy. And it kind of gives you it helps me personally on visualizing where my positions are and where I had entered at, instead of just averaging it out bit by bit. I have personal experience with this. It sounds crazy, but I prefer having separate positions as opposed to an average price. Okay, there truly is no difference mathematically, but just visually and executing my trades, I like to have those separate positions. But I'm off on a bit of a ramble. We love everybody. I hope everybody has a great week. Perhaps this week we'll go into some more details on some things we've been looking at. And I will talk to everybody later. Peace.